Hi everyone. So in today's video, what I want to talk about is how you can save tax on employee benefits. Just do a quick recap of what employee benefits are. Essentially, if you're an employee in a business or you're a director of the business, then you may get certain benefits. They might be company cars, there might be private medical insurance or other things. And those benefits, what they do is they incur tax. So it's important to understand how those taxes work and how to save money on those taxes. So if you give someone a benefit from your business, if it's an employee or a director, as in yourself, then the employee or director will have to pay income tax on it. And you as a business will have to generally pay Class 1A employer's national insurance. So the income tax might be 20%. The Class 1A national insurance might be 15%. So the total tax on that's about 35%. So this is where the tax saving opportunities are, because, for example, if you were a director of the business, you also own the business. If you were to not have a benefit go through your business, and instead you were going to just take more dividends and pay for it yourself, then what will happen is when you take your dividends and pay for it yourself, you'll essentially have to pay corporation tax on that money before you get it. And you'll also have to pay dividend tax. But corporation tax and dividend tax and basic rate is about 27%, which is still cheaper than paying 35%, which is a combination of income tax and employers' national insurance. So that's the first way to look at it. Is it a benefit you could just pay for out of your own money as a shareholder and director, or do you definitely need to put it through the business? Some benefits, like a company car, if it's petrol or diesel, you won't be able to pay for it yourself like that. It would have to go through the business, although you shouldn't get that kind of company car in the first place. But other things like private medical insurance, or if you've got an electric car, you may actually come to the conclusion, I don't want to pay for this out of my business now. I'm going to make it good, as in reimburse the business for it out of money that you're going to pay dividend tax on. So that's one way. Just have a think about if it is something you should just be paying for yourself rather than putting it through the business. And then the second way is, if you've got employment allowance left, then it might just be worth going to your employees and saying, look, instead of getting this benefit, why don't I pay you more money and then deduct it to cover this benefit as a salary sacrifice? And yeah, they'll have to pay income tax and employees' national insurance on it. But because you got your employment allowance left, you won't have to pay employers' national insurance on it. So you might just have to give them a bit more salary so they can then sacrifice it for that benefit. But actually, that could also save you employers' national insurance as well. I know this is slightly complicated, but what I'm trying to say is have a think about how you provide benefits to your employees and to yourself, because automatically putting it through a business and putting it on a P11D form isn't necessarily the most tax efficient way to do it.